Recording in progress.
Hey, this is Jon Johnson with BlackKnight Mortgage. Coming in with you with a quick video. Actually, not a quick one. This is going to be our longer video. This is going to be the Mortgage Market Mastermind, myself, Gabriela, Frantz, and our guest again, Tanya. So, good morning, everyone. How you doing today?
Good.
Good?
Saturday.
You know, it is good to work on a Saturday, right?
Yes, 50% of the year, and a lot of good stuff is happening. I say good stuff, other people maybe have different things. So we're going to talk.
You're correct. 50% through the year, you know?
Yeah.
A lot of experts have things they're saying that was going to happen this year. Some of that has come true. Some of it has not come true in the housing and mortgage industry. We'll see. Tanya, how you doing this morning?
Doing good. Doing good. Happy to be here.
I love it. Thanks for showing
for
up.
the insight.
You got it. Thanks for,
Again.
of course. You were a great addition to this, so thank you. All right, so we jump straight into it since we have a good amount of information. All right, so once again, the goal of this YouTube page, the goal of my business in general, is to help people to get debt-free through home ownership. So in this podcast, we're going to discuss mortgage and real estate news that has occurred in the last 30 days. I'm going to start off with some rates, some numbers, some market data, and then we'll transition into some wide-ranging topics. But actually today we're going to spend a lot of time on actual data since I have some pretty good data points that I want to go through. I also have the topics timestamps. You can be able to jump to the topics you want to hear easily in the video. All right, so before starting, what is something in the industry that has been on your mind lately? Gabriela.
Let's start first. There is a lot of, that's why I say there's a lot of fear, there's a lot of concerns, there's a lot of worry, there's a lot of doubt. And it's not only coming from consumers, but some, people in our industry. And this is what people have been, talking about the market shift. And for those people that weren't part of a market shift in the past, this is the first time they're going through it. And we know that in the past couple of years, more realtors entered into the business as well as loan originators. Yeah. And so this is a new era for them, or a new shift. And, they're not quite fully confident in what to expect. So that kind of leads to speculation.
Got it. So big thing on your mind right now is all the worry and concern that is in the market.
Yeah, especially coming from professionals and, the ones that have been through it and everything, they're trying to reassure everybody that there are things that you can still do, for your businesses. So this is more directly to our industry professionals. That's why we do a lot of masterminds, and we're part of a lot of regional calls and a lot of sales calls so that we can talk about these issues and people can be candid and honest about what they're thinking and feeling. And now we have to kind of transcend that same message to our consumers, because if we have fear and doubt, then our consumers are going to have fear and doubt.
Sure. That's another big reason why I do this video, is so at the very least, my buyers, agents that I associate with, friends, family, etc., can get the correct news about the market, because it's unfortunate, but I can't compete with the news when it comes to how much information they pop out. You go on Google, you go on Facebook, wherever you're going, YouTube, you're getting inundated with this is happening in the market, this is happening in the market, etc. Yeah. But at the very least, putting out this longer form video, some other videos, etc., I can be able to help them out with what's actually going on, rather than people that are trying to scare people just to be able to get some clicks.
Yeah.
Tanya, what has been on your mind in the industry in the past month, please?
I would say about the same thing. It's just the worry of, these new agents, new loan officers, trying to get the business and stuff, where the shift is going, stuff like that.
You got it. Because it's, even the economists in the business have no idea.
Right.
They'll tell us what they think is happening, and then the next day it goes the exact opposite. So we're going to play part-time economists today. We're not economists. None of us are. I'm a loan originator. Tanya's a loan originator. Gabriela is a marketing specialist. So we play certain roles in the business. We're not economists, but I think we do a better job of understanding what's happening in the industry than your average, Joe Schmo who's outside of it. So good. Let's go ahead and jump into it. So rates historically, as you can see, this is over the last 50 years. We're still not at the highs. We're not at the highs. We're still not even at the average. Rates have been going up over the past, 6 months, 6, 7, 8 months. But overall, we're still not at the the higher rates that what it was in the 80s or even in the 90s, and for majority of the 2000s. Overall, what do you ladies get into this, Gabriela?
I love my history. So for me, if people have to look at things in the long term as opposed to in the short term. And when we're talking about history, you actually have to look in the long term in the past to kind of see, where we are right now. And you've said it exactly. We talked even about it last month. Is that rates are still historically low compared to what they were previous decades. There's different factors now than there were even back then. However, we're still saying that it's still a good time to buy and to sell because there's other factors that we know are still consistent and true. Home appreciation, which I know we'll probably talk about that in a little bit.
Sure.
So I always like to look at things in the big picture as opposed to like what's immediately happening right now, so that there's a better perspective of like, okay, we've weathered through this before, not just as individuals in the market, our parents, our grandparents, but just as a country in the real estate market.
Good. Tanya, you feel on it?
I also agree. It's not, as high as it was back in the day. And we know that it's going to go up and hopeful that it's going to go back down. And we're going to be able to help a lot of families who are getting into homes right now at a higher interest rate. I feel like, in a good 2 years or maybe less, we should be able to refinance, the rates go down a little bit more and refinance them.
You're correct. You're correct. I mean, if they zoomed in on snapshots on these,
Yeah.
it goes up, it goes down, it goes up, it goes down in periods of time. The rates are changing every single day.
Mm-hmm.
A lot of people don't understand that. Every single day they're going up a little bit, down a little bit. They're doing this little tiny thing and it's going, either progressively up or progressively down. So we had a good little downturn, since the 80s where rates have been going down for a good amount of time. But now they jumped up a little bit. But there is going to be a period of time, a year and a half, et cetera, where they will jump back down again. But as always, marry the home, date the rate. You can always change your rate with a refinance a year after, 2 years after. No one's keeping a 30-year mortgage. Nobody.
Yeah.
Last 12 months. So just to get a little bit, more of a tighter time frame of what's happening with the rates. By the way, every buyer can choose between about 15 different rates per program. So it's not like, I have this credit with this program, I only get this rate. There's always a middle rate that you can choose from. And if you go towards a higher rate, that means that you're going to be able to get some lender credit, maybe a couple $1,000s.
Mm-hmm.
And if you go towards a lower rate, that means that your cash to close is going to increase maybe about $2,000 to get that lower rate. First-time buyers, I hardly ever recommend buying down a rate. There's other different things you can maybe use that money towards, especially since you'll probably be refinancing within a few years, either to get cash out to pay off things or just to be able to get mortgage insurance off the loan, things of that nature. But overall, looking at the last 12 months, as we can see, yes, rates have gone up. They've pretty much doubled. They've gone from around the 3s for most people, and now we're around the 6s for most people. Some programs a little higher, some a little bit lower, etc. But overall, that's where it's been at. We did have, about a week where it went down a little bit, and everyone's, getting hopeful, and then the last couple of days it started jumping back up. So it's still trending up. Inflation numbers are still very high, but they're still seeing that this number can go even higher than where it is right now. Gabriela, what do you feel about it?
Well, as you said in the historical map, if we were to kind of look and take like a bit of a snippet into one time frame, this is what that time frame looks like. And still overall, while we compare the historical one to the current one, yes, it's still low, but people want to look at things in the short term. And so, yes, it is high. And so when we look at the advice that real estate professionals and mortgage professionals were giving consumers back then, it's like, this is still a great time. This is a better time. This is the best time. And now we're still saying, it's still a good time. So when we look at the rates just in a shorter clip of time, right now, everybody can remember the 2% to 3% rates. And, there were buyers that unfortunately weren't ready for, various reasons, credit, income, et cetera. They were still recovering from COVID and loss of income and so forth. But now that there was a time where people were saving money and could get back into the market, then they kind of had to face with, inventory. And I know we'll probably talk about real estate inventory in a little bit, so I'm just kind of maybe jumping a little bit ahead. So I see a lot of information in a small graph like that, but overall, it's like if you were to just look at it in even like the last 3 years, in the last 5 years, you'll still kind of see that we're still in a good market. Interest rates are going to be what they are, and our logos, modern, like whatever we're saying right now is like, marry the house, date the rate, because there was also a great period of time that people were refinancing at lower rates when they were in the fives, and they got their refinance rates down to, that's
To one, I've
Okay.
gotten, yeah.
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 So, that's again back to like, listen, if you look at this in the short term, just know that later on down the road, as a consumer, as a responsible homeowner, and also being fiscally responsible with your income and your assets and what you value when it comes to your real estate purchases, you can change those things. So, but what you can't change is that the house that you wanted when it's not available anymore.
Yeah, and you're not even building a crazy amount of equity to be able to
No.
loan anyway. So you're
Yeah.
doing 30 years. That's not the game. The game
Yeah.
is a 15-year mortgage.
Yeah.
So, I mean, in the beginning, get what you can get a monthly payment that works out well for you and your family, so that you guys don't, feel cash poor when you're in your home.
Yeah.
But the goal is over the next 3 years, 5 years, however many years, to eventually try to get towards a 15 or 20-year mortgage, definitely 15 year. That's going to save you over $100,000 of interest over the life of your loan just by doing that. Tanya, what do you feel about this?
I would say the same. I know that, I've been in the market for in the business for a long time. So I know that when 2-3 years ago, the rates were in the fives and the six, bond loans were in the 5.5 and stuff like that. And we refinanced them 2 years later into a 2.5. So I have hope that in about 2 years, we're gonna see those rates come in.
Yeah, you're correct. Or it could be sooner than that. You never know.
Yeah.
It could be the next 6 months, but hey, we're not economists. No. All right, so some more data, and we'll jump through this. I'll read through all of it, and you ladies just tell me which data sticks out the most to you. So, loans under contract. This is from BlackKnight, which is the main system that a lot of lenders use for making rates, locking in loans, things of that nature. So, loans under contract with rates locked are down 11% from May, with declines seen in both rate and term. So rate and term is down 9% month over month, which means from I think it's from May to June, and then down 90% year over year. Cash out refinances, which means you get cash out to either pay off debts, home improvements, things of that nature, is down 13% month over month and down 40% year over year. Purchase loans are also down about 11%. Which accounted for 82% of all lock activity. So purchase loans is the majority of loans being locked in right now. Purchase locks are down 21% from last year. But one stat that they did put in there, they are up 3% from 2019. So, comparing things from year to year may be tough to be able to see from that standpoint. But when you look at it in a bigger picture, it is more than other years. And lastly, average loan amount decreased from 359 to 351K. The average loan amount decreased. Gabriela, any feelings on this data?
This is where I'm definitely out of my element, just because, I don't look at these numbers the way that you guys typically do. So what I will look at is just, how they've trended in the past before. So I'm actually looking at the purchase blocks are down 21%, but they are up from 3% from 2019. And, we're talking about what was going on in 2019 in the real estate market throughout the whole country, where we're currently at. We were dealing with shutdowns, lockdowns, loss of income, people going on unemployment, individuals leaving the job market at that point. So there has been a shift in the unemployment and as well as in available jobs in the economy as well from 2019 to now in 2022. So I believe that that has a lot to do with, like, people are feeling a little bit more financially secure at this point now than they were back then to be able to make purchases. And there's other factors too, investors, who are really in the market, the past year, year and a half. And now we're looking at, it's a more buyer friendly market, still a seller's market, but it's a little bit more buyer friendly. And especially for first time home buyers, which is what we're starting to see more activity from in the market as well. So the average loan amount decreased from 359 to 351. That also again goes to what real estate professionals are looking out there. And I'm specifically talking about the Tampa Bay market. I won't compare data from other other states at this time, because we get more data about this market than we do other markets in general. And there are homes now that are not getting under contract immediately. They're staying on the market a little bit longer. This again goes back to what makes realtors a little bit nervous about what's happening in the market. But in understanding that this isn't just isolated to like that particular home, it's just a general market shift. So those are the 2 points that I picked up from the bottom, because I like the top part that is a little outside my realm.
Sure. And by the way, I love what you mentioned so far, because I was thinking something similar towards you before I started getting into the data for the month, was that I was thinking, oh, it is this crazy shifting market potentially right now. But once I get into the data, we may see that it may be otherwise. But we'll see later on about that. Tanya, what do you feel about this? Or what number sticks out to you?
I think it's a lot of the shift, and it's also a lot of the inflation of the market as well, on why the average loan amounts have decreased. People were buying 3 months ago, people were buying houses with 20, 30 over, they weren't really valued at that point, but now everything is, kind of slowing down and dropping and, going back to normal in a way, as far as appraised values and stuff. So of course the average loan amounts are going to decrease.
Yeah. I'll kind of add onto this. This is data for this is pretty much data for new pre-approvals that are happening. New pre-approvals, new loans being locked in, new refinances being locked in, things of that nature. The overall buyer pool, from my perspective, is still crazy high. The number of new buyers that are trying to get pre-approved, et cetera, is slowing down. But still, there's still buyers from 6 months ago that are still trying to get in. From 12 months ago that are still looking, trying to find a place.
They're still trying to find a place.
The overall buyer pool is still crazy high. And once again, we speak mainly in the Tampa Bay area, but I'll show later on as well. There's some regional data that shows you that what's happening right now in Tampa is not the exact same thing that's happening in Kansas, California, et cetera. But overall, though, the unfortunate thing with buyers is that they are going to, as soon as they see rates dip 5 or 0.5% or 1 percentage point, they all of a sudden want to jump in, try to refinance, jump in, try to buy homes, things of that nature. When in reality, the most important thing is, if the numbers look good for you and your family, go ahead and refinance to pay off debt, refinance to go to the 15-year, purchase a home because your family's growing or you need a home, et cetera. But I just see buyers, who knows, rates could go up to 9 or 10%. But buyers will still be like, oh, we don't want to jump in, rates are increasing, and then they'll go from 10% back down to 9%. And then buyers will finally want to jump in because they think, oh, rates are going down, so I should try and do this now. When in reality, they could have refinanced now and got the 6% rate, or purchasing about the 6% rate. Once again, we're not economists. I have no idea where rates are going to go, and neither do any of the top guys. But most important is, if you're in the market looking, definitely keep continuing. In my opinion. All right, what else we got? MBS highway data. So once again, I'll read this data and just kind of tell me which one sticks out to you. So if you were born in 1941, by the time you were 40, you lived through 9 years of inflation being 7% or higher. And just for a guideline, they want inflation to be closer towards 3 or 4%. But if you were born in 1980, you've only lived through 1 year of inflation being 7% or higher. That's a pretty big set in my opinion.
Yeah.
When it comes to perception, that's understanding how a market like this works and getting through it. And I'm gonna go through the rest of them and let you guys tell me what you feel about them. Average response of 53 economists say 44% chance of recession in the next 12 months, which is up from 18% in January. So in January, they were saying, oh, 18% chance of recession in 12 months. Now they're saying 44% chance of recession in 12 months. 58% of delinquent debt attempted to be recovered in 2021 was medical debt.
Hmm.
All right, we got 3 topics that we just mentioned. Gabriela, did one of those stick out to you? Have feelings on one of them, etc.?
I have feelings and thoughts about all of them, actually.
You got it.
But,
Let's hear 'em.
you know, let's kind of start the medical debt one. We'll talk about that for sure. But I'm going to start with the very first one. So, if you were born in 1941, what was actually happening in the world at that time? And that was World War II. So,
Yeah.
all countries were involved in a major war, and if they weren't involved in it, they were indirectly impacted by it. Import, exports of goods were affected as well. So, in that time frame, you know, when you're saying that by the time you were 40, you lived through 9 years of 7% of inflation, you know, it's interesting to compare that right now we are currently facing an international crisis, not just in Ukraine, but other parts of the world as well. I mentioned Ukraine because that's the most significant one that started in February, and that's kind of where things started to really take a turn, you know, for the economy here in the U.S. You know, we were starting noticing we were already having issues with imports, you know, from other places. We were already having transportation issues, you know, getting goods to the consumer. So we were already having some struggles already to begin with, and those were latent issues from COVID and the pandemic at that time, which, you know, we're still somewhat in it. There's still people that are getting it. That is just with the data that's being put out there right now. And so you have all of these major factors that are occurring right now. And when you compare it to 1941 and those 40 years, you know, there was a lot of things happening even then. And also from 1941 until the war ended in 1945, you know, women were going back and were going into the workforce to help support the cause. So there was also home issues that were happening as well. So there were, you know, historically speaking, what was happening for the first 40 years of 1941, and to see that you lived through 9 years of 7% of inflation, then that it's not just a country issue, it's a global issue at this point. Now, I was born in 1980. That's how old I am here a little bit.
25, got it. Continue.
So kind to me. You know, but I love my age, and I love that, you know, I've learned more as I've gotten older. And then I've only lived through 1 year of inflation. So, you know, it's gonna just be a little bit more interesting to see what's coming next. Because if our, you know, sadly I don't have any family that was here at that time in 1941. However, you know, in my family now, we are going through from 1980 to now. And there is going to be another, you know, inflation. Maybe it'll be another year. We're not economists. We're going to keep saying that throughout the podcast because it's important to note that, you know, we have been through this before as a country. So I'm going to stop on that point because I don't want to get too much on the line. So next, we've got a Tanya.
It's coming. I think, you know, the recession's coming. We're just gonna go through it and just be prepared. I feel.
Yeah, people don't know like when recession things happen. You're in a recession by the time you know that happens. The
Yeah.
recession is always a history situation.
Yeah.
So we could already be 4 months into a recession right now, but they're not going to call it a recession until 6 months from now, type of thing. So we'll see how that goes when it comes to rates. Rates are highly tied to inflation. It's tied to many different things, but inflation is the biggest one. A lot of economists are projecting that inflation will start going back down towards the end of the year, which means that hopefully that means that rates will start going down a little bit after that as well. But yeah, it's just good to be able to understand that, you know, you'll hear people talking about these times right now, but
Yeah.
people have actually lived through it.
Yeah.
If you're under 40, we haven't lived through a time like this
Right.
recently.
Yeah, no, my mom did.
There you go. There you go. There you go.
Yeah.
I want to mention the medical debt real quick too.
Yeah.
Especially if you're going through the mortgage process, trying to buy a home, refinance, etc. We don't care about medical debt. If someone's calling you 100 times a day about it, at least for this period of time, don't worry about it. Don't touch it. Don't even try to pay it off, in my opinion, because if you try to pay off medical debt, that's going to end up becoming a situation to where your credit score could go down. So
Yeah, that's the thing. It's like, I'm not gonna touch that one because I know that, we've already done some marketing on it and the message is kind of starting to get out there a little bit more. But it's kind of questioning that medical debt was holding people back, for such a long time to be able to get into the buying market. And some people didn't even attempt to it because they thought that medical debt was just gonna hurt them. And also, on a more somber note, some people, lost their homes because of medical debt as well, because they would put up their homes so they could pay off these, debts. So, it's a good thing. It's a good thing that medical debt isn't going to impact your ability to buy.
yeah, after you bought a home, you're not planning to purchase at that point in time, or you refinance, you feel at that point in time. If you feel as if you want to pay medical debt, go ahead and do it. But when it comes down to it, it's not increasing your credit score like that. We don't use it in the mortgage business, so that's up to you.
It does have like a negative effect though, if you are going into a collection, the collection will
If it
bring
goes
your
into the
score
collection,
down. So you want to stop that medical debt.
if you can pay it before,
Right,
if
you
you can
want
pay
to
it
pay it
before it's
before,
collection, yes.
if you know that it's going to go into collection and the collection will drop your score and then you won't be able to qualify.
Correct. But if it's already in collection, you're trying to.
Yes, if it's already in collection, don't even touch it.
You got it. That's right, that's fine.
The future ones do pay them off before they go into collection.
You got it. All right, we're gonna get into some fun charts. All right, some more real estate oriented charts, in my opinion. So this is one of the bigger ones. This is going to destroy a lot of what people are saying right now, because a lot of agents, they go off how they feel, and they tell how they feel to their buyers. The news would tell how they feel about certain things. But when it comes down to the data doesn't lie. So active listings. Yes, active listings have increased over the past couple of months. So if you look at any news or wherever, they're going to say, oh, listings are going up. I see them going up. That must mean that, the market must be changing a ton right now. Well, as you can see in a majority of markets, in all these different years, this time of the year is always a year when listings go up. They went down in 2020. 2020 was a weird year. Everything was, reversed and weird in that year.
Mhm.
But in all the other years, as you can see, around this time of the year, listings do go up. It's going up faster than it has in the other years. But this time of year, a lot of parents, they don't want, a lot of the housing market is built around families and them trying to move to different areas, a new kid, etc. And parents don't want to move homes in the middle of a school year.
Right.
So a lot of times listings get jacked up around this time of the year, beginning of summertime, and then it slows down a good amount right after summertime. Because who wants to be able to start their kid in school in August and then have to change schools in October?
Yeah.
So the more important thing is the chart on the right, in my opinion, which is the days on market, which tells you what type of market we're in. If homes are on the market for less than 6 months on average, then it means you put it on the market and within by 6 months, it's off the market. We're in a seller's market. That means that the seller has more power because there's going to be more buyers potentially in the market than there are people trying to sell the homes. As you can see, over the past few years, we've been in the seller's market this entire time. And right now, we're in the heaviest seller's market, which is an indication of a strong market, a market that is not going to be in a bad situation, with us being around 30 days for homes being on the market. If somebody puts a home on the market now, within 30 days, there's a buyer under contract purchasing that home. And that number has not shifted up yet. So in my opinion, I'm going to be watching that number and see how that does over the next few months, next few years. But that one, from what I'm seeing with that number is showing that nationally, it's nowhere near, a changing market like what we're hearing with real estate agents and everywhere else. Ladies, what do you feel about this data? Gabriela?
I like that it's compared, and this is national data, so it's compared
National.
throughout, yeah, so it's compared throughout the whole country. And then when we look at local market data, it's a little bit different stuff. But to look at it as a whole, as a country, it does still indicate that homes are still appreciating at a higher value. And even though in our local market, you know, we're seeing realtors who are getting, you know, like, oh my God, the home that I'm listing has been on the market for 3 weeks. You know, there's a mindset there. You know, they were used to having a home, just any home, put on the market, and then they had like 10, 15. I mean, there was an insane amount of offers that were put on homes. You know, and we saw that because, you know, as our clients, our clients are like, okay, I'm making this offer and we're starting to prep work for it. However, when we look at it from a national perspective, you know, it just kind of gives it a different look overall. That as a nation, we're still not in a true buyer's market, which we're not. I mean, and I do say we're more buyer friendly, because the homes that typically would have been on the market for less than a day are now, you know, maybe a few days, a week or 2 or 3. But it's going to take a long term of that data to start shifting before you can see it on a national graph, because it has been like that before. So still a strong seller's market, but I still like to think it's a little bit more buyer friendly.
Yeah, I mean, here's the thing: there's not new buyers coming to the market. So instead of competing with 20 for the average home, now you're competing with 15 or 10. So is it more buyer friendly? Yes, but homes are still flying off the market very quickly.
Yeah.
Homes are still appreciating at a very high clip that we're going to see a little bit later on. And to be honest with you, your average agent is not dealing with a big sample size. When they tell you, oh, I saw this happen. The
Yeah,
average agent, you know, they help people buy or sell maybe a couple homes a year. An agent that's, you know, in the market may help 20. And an agent that's doing a lot of business may do 100 deals in the course of a year. So that's an okay amount. But when we're talking about the data of, you know, thousands and thousands of homes being sold, that data surpasses what your average person is going to say. But Tanya, what do you feel about these two charts?
I believe you both covered it all.
Covered it all?
Covered it all.
so
Look at
Tanya, with your realtors that you've been working with, I know that we hear about the same, you know, I don't want to say chatter, but that's probably about the right thing. You know, so is it fair to say that locally, and John hit it on the head, like, you know, when you're dealing with realtors who don't have a big pipeline of, you know, inventory that they're working to sell, not necessarily the buyer's side of it, but like the selling inventory and stuff. You know, they're only looking at it from that perspective, just like their inventory, how long it's been on the market for their inventory. But from a larger perspective, you know, this is probably a far more realistic message that realtors can maybe start
For like listings.
Yeah. And
Yeah.
for the agents who are bringing buyers into the market.
Yeah, the agents that are really doing a ton of business, what I'm hearing is price it right, the market is running with it. There's going to be tons of buyers, they're going to drive the price up. It's a crazy market when you're pricing it correctly.
Right.
If you don't price it correctly right now, you could get some crickets out. Unfortunately, buyers are tired, they're worn out over the past couple of years. There's some buyers who have been really looking and not able to get, you know, offers under contract. And they're point out to where like, hey, I'm not going to be throwing you know, money out there for any other property. So I'll get my offer. If they don't want it, take it or leave it, on to the next. So there are some crickets that are out there, but in general, the agents that price it right, the sellers that allow agents to price it right, they're moving pretty quick.
Oh, I love that you said that. I really, really do. Some of the price reductions that, you know, we're seeing, and also when you talk to the realtors, it really has a lot to do with the seller, you know, and the realtor really does come with like, hey, this is the data that I have in your area, and this is how we should price the home. They'll even consult an independent appraiser to come out and also give an assessment. So you're not just taking the word of the realtor, you're having a professional appraiser come out and do an independent, valuation, but the seller wants what the seller wants. So, we saw a lot of that they were pricing homes at a higher value, and realtors that, went along with what their sellers wanted, in that market, where they were over asking price, even when the appraisal report came down a little bit, they're like, no, the appraisal was interesting, we're willing to go ahead and go over. However, now, when the property doesn't sell quickly, then the seller has to kind of really take that sombering look and like, okay, maybe we did price it a little too high, but now I really do need to sell this house for X, Y reasons.
Right.
So we're still dealing with people that still have to buy and they still have to sell. And if you still have to sell, then trusting your realtor with the data that they bring you, and even getting an independent appraisal review as well, that's going to give you a really good selling point for your home. So it makes it more competitive in the market. You don't have to deal with price reductions, because no realtor and no seller ever really wants to deal with that, because that does show up on the MLS report, that there was a price reduction. There's a whole marketing that goes behind that. Adding that piece into it. And there's nothing wrong with the home. It was just not priced where it should have been priced, or it could have been priced at that point. So this is, we say it's a shifting market, but really it's a re-education on the fundamentals of real estate and the mortgage practice.
Cool. Speaking of price reductions, all right.
You went right into it.
So we have
I didn't
median.
look at these slides in advance, just so you guys know. I tried. I couldn't.
She tried. Good job trying though. Median listing price. So as you can see, homes are still going up year over year. For economists, they want in the housing market homes to go up 4 to 5%. They feel comfortable with that. That makes them feel good. Well, we're looking at 16% right now, 17% year over year. So they're still going up very, very fast. But as you can see, there is homes that are being reduced in price, like Gabriela did just state. I always continue to go back to my one slide of days on the market.
Yes.
Overall, days on the market is still crazy, crazy low. But as you can see, this price reductions, they normally start having more reductions around this time of the year, as you can see in the slides. But the reductions have increased dramatically, over the past couple of months compared to where it normally does. Also, as you can see on the slides, we're still not even at price reductions from normal years. So in our market, we consider normal years pre-COVID. So 2017, 2018, 2019, that's kind of how we measure what we're looking at right now. And in the trends, it's to those years, because 2020, 2021, those are more weird years. So yes, price reductions have increased a good amount over the past couple months. What I'm seeing, they're still not at the levels of, where they were at in a normal year. So in my opinion, price reductions are still small. But we'll see how you ladies feel. Gabriela, what do you feel like, Beta?
Oh man, I think I said a lot in the last slide, but it just goes back to, informing and providing your sellers with as much information and data, and also making them aware that, in the end, they are consumers as well. They're selling, they are selling their home, and the realtor wants to go ahead and also appease, their seller, but there are still sellers, there's still realtors who like, listen, if this is not getting any offers within the first week, we're going to have to reevaluate and do a price reduction, because they also know that the market is still a good market. And so they don't want that home at that price staying on the market too long. So this is where there's a lot of negotiation with the seller and the realtor, in hopes that they understand where the market really is in their local market. So again, we're looking at national data here. And while we look at it, and you're right, we're not seeing that big of a trend just yet. locally in this market, because Tampa is one of the top markets in the country, that you're going to see the most activity. And we do get a lot of local market data as well. It does vary in a way, but in the larger picture of things, it's just not nowhere near what the other data in other markets are looking at. So realtor friends, just hang in there. You know, your sellers will come around, and you know, buyers, you know, especially realtors who were kind of hesitant to work with buyers, you know, this is also an opportunity to kind of educate your buyers as well on negotiation opportunities. Recently, I heard of what was called a seller buy down, and instead of actually doing a price reduction, you actually offer a seller concession. So you still keep the home at the listing price, but you negotiate with a strong buyer, and that's where, as you know, lending professionals, you know, we want to also make an advocate of a case for our buyers that, hey, we have a solid buyer, you know, let's try to negotiate and work with them as well. And if the seller and the realtor that represents them offers them a seller concession, that can make a huge difference. So it's a win-win for both parties.
Sure, you see more negotiating power.
Yeah.
Is this price reduction at 50%? No.
Yeah.
Did we go up from 8% to 14%? Is that an increase? Yeah, it's an increase. But if this chart shows 0 to 100% rather than 0 to 22%,
Yeah.
that 8 to 14% will look a lot smaller than it looks on this smaller graph. So yeah, there's more price reductions happening, but and you're getting some more ability to be able to negotiate.
The buyers, yeah. I'm seeing more of that they're able to, because of the price, negotiate. Because of the price reductions, they're able to get on the contract.
Yeah.
Yeah, much faster than few months ago.
Yeah.
Yeah.
You got it. Good stuff.
That's good.
All right.
That's good stuff for our buyers.
Yeah.
Yeah. You know, I say buyer friendly market.
Thanks for that perfect segue into the side two as well. I was hoping you were gonna do it for the next one too, without knowing the side,
Man,
without even knowing the slides.
No. I just know our forum, and I kind of build the data that you together. Because you like to, you know, so just so I can state something that's very obvious in this podcast is that we are giving first look reactions based on what we've been hearing already throughout the past, you know, from the last podcast to this podcast. And Jon does an amazing job compiling all of this data, so not just local data, national data. And you're getting our candid response and reaction to seeing it in one setting. So, you know, we pull a lot of good stuff out of it.
Sure, you got it. Good job, Gabriela.
Good job, Jon.
All right, so I'm actually going to bring this
Thank you.
data. You're welcome. I'm going to bring this data that we have right now. I'm going to keep bringing it more local. So you can see that, yes, this is national data, but this data does change a little bit when you start bringing it more local. So this one right here, it has some columns that I don't even recommend looking at that are kind of goofy, but some other columns that really show you that things change from location to location. So we have different regions: Midwest, Northeast, South, and the West. And this first column is active listing count, which means that, you know, what's the number of homes that are actually on the market. And year over year, in the Midwest and the Northeast, that's not really increasing. So if you're in Kansas or if you're in, New York, it's not really increasing that much the number of active listings that we're talking about.
Yeah.
But if you look at the South, Florida, the West, California, Arizona, New Mexico, and also Nevada, it's increasing dramatically. So sorry about that, ladies. On a US chart, you're going to see it's going to say, oh, active listings are up, whatever, 20%, 30%, 40%, whatever it's going to say. But if you're in the Midwest or the Northeast, you may not be seeing that. And if you're in the South or the West, you're saying they're absolutely up. I'm seeing, you know, listings double. So it really is a regional situation. New listings, so not just total listings, but listings that are newer, the Midwest and the Northeast, they actually dropped year over year for new listings. Which, if you talk to a real estate agent, they're going to, like, especially in Florida, they'll be baffled if they were to hear
Yeah.
a statistic like this.
Yeah.
While in the South and in the West is actually increased. So as we can see, the South and the West are really leading when it comes to the activity happening in this market. Median list price. So the average, year over year list price is coming up some in the Midwest and Northeast. So if it was 300K, it's now 309K in the Midwest or Northeast, 300K. Now the home is being priced at 304K. It's going up a little bit, but once again, the area that's leading, prices going up is going to be the South and the West. Yep, love the South, dirty South. We can just exit off that median list price per square footage. That's not necessary. It's pretty much the same thing. Median days on market. Once again, you talk to any real estate agent, they're going to say, "Oh, the home should be on the market for longer now, right? I'm seeing the price reductions, etc." Yes, reductions are happening. Yes, it's slight changes in buyers having more power. When it comes down to it, homes are still selling crazy fast.
They are.
And price reductions. So, that's the statistic we were talking about.
Yeah.
In the Midwest and the Northeast, reductions are not really happening that much. And even in the South, it's happening a little bit, but not that much.
Yeah.
But in the West, it's carrying the big majority of it with 14% of the main price reductions. After seeing all this regional data, what is your opinion, Gabriela? Your feelings?
Oh, my feelings. I mean, I don't really deal a lot with like the Midwest and the Northeast because as I'm looking through all of it, there is a lower percentage and consistency throughout them. But when in comparison to the South and the West, I mean, you really do get a very stark contrast in a lot of different areas. So active listing counts year over year, the South, this was, that's why Florida was such a growing market. You had people actually leaving California, New York, all of these major metropolitan cities and states, and they were coming down here and invading Florida. I'm sorry, I'm saying inundated because, there's more drivers here than I'm used to. That's a personal tip right there.
No.
Yeah.
Tell us more about how you feel.
Well,
You
guys gotta learn how to use your signals, man. We're not mind readers. So I scroll for a moment. However, the South has just been leading the market in a lot of areas. And so when we look at the national statistics and then we compare what our local data is, it is just a little bit different. And so, we have to also make sure that we fully disclose that we're only looking, when we talk about our local market, it is the Tampa Bay market and the surrounding counties. But also, as a state as a whole, because we're licensed in the state of Florida and 5 other states as well, that the South, I mean, just in general, but when we're looking at the price reduction specifically, because that's something that I was, mentioning just before, it's still not as high as the West, but the West also saw a lot of major, I'm sorry, not an influx, the opposite of influx is, oh, great.
Deflux, reflux.
I don't want to say fleeing the West, but that's what it's going to come down to.
Sure.
There was just a lot of people leaving those areas for many reasons. The cost of living was, it's higher. There's state taxes in some areas. Florida has a lot of benefits in living here. We don't have state income tax. And generally for a very long time, the cost of living here was pretty fair. And sorry if you feel like, if you specifically don't feel that it's fair, but there is data that says that our cost of living was just on par, with the national data, where was a more livable, slightly more livable wage. It's only in the past 3 years have we started actually feeling, and this is from individuals that have come from other places, to now live here, or investors, because there was a huge influx of investors purchasing inventory in this in this market and in the South, in general, that has driven the cost of living, the cost of goods, and just general for individuals that have lived here with that comfortable, you could afford to buy certain things and now you have to make decisions on what you can and can't buy. But we also have other factors as well. And just really look at how the migration patterns of other areas in the country have affected the South significantly. And also how we've affected those, because I also believe that when we're looking at the price reductions, while we're at 7.7%, this West, they are also having price reductions higher than the other regions because so many people have left those areas as well. So I'm a preacher that wants to know a little bit more about that market, but staying in my lane and focusing on what I know to do best, and that's stay local, stay regional. But it is kind of curious to see how the South and the West have become, two contenders in this market.
Yeah, I'll say one note off what you stated. Areas with higher price points have more volatility. They have more chance to go up quickly and then crash harder.
Oh yeah.
And so you see in places like the West, their price points are extremely high. In the South, where we're at right now, especially if we go further, we're in Tampa, you go further towards Miami, very volatile to be able to, yeah, it's really hot when it's hot, but then when it gets, when it starts cooling down, they're more likely to get hit more.
Yeah.
Tanya, what are you feeling from these numbers that are on here?
It just makes sense, like that our numbers are a lot higher than the rest, just because I know, I'm an out of state, I'm from New York, so I know a lot of New York people, specifically, New York's getting a little bad out there, and a lot of them are trying to move, and Florida is the next big thing, with the assumption that, yeah, prices here are a lot lower than back in New York and stuff like that. So I know that that's one of the reasons why our numbers.
Yeah.
Kind of, do you feel also because it's like a cost of living, and also just in general, like, we're talking about like, the maintenance of keeping homes in the winter time up there as opposed to down here where we're trying to keep cool in the summer and they're over there trying to stay warm in the winter and cool in the summer.
Yeah. I mean, they got both.
Heat waves, yeah, they got heat waves over there. So
It's definitely a whole combination of that, because I mean, taxes out there are insane.
Yeah.
It's
For
gonna be,
home.
it's
It's
gonna
the
be,
way the economy was set up over there.
it's gonna be fun to see the migration of Americans over the next 10, 20, 30 years, because in my opinion, why is anyone still living in the Northeast? Besides those where the places that people migrated, they started off at, et cetera. I know you got family ties up there, parents, grandparents, et cetera. But when it comes down to it, like 95% of people that I've seen, let's say 100, very close to 100% of people who I know who have moved to Florida, their response is always, I wish I moved here soon.
Yeah.
It's never like I don't know. I see some 20-year-olds move down here, then go back up north to be close to family and whatnot, and they don't feel the same way. But anyone who's an adult, 30, 40, 50, 60, who moves out to Florida, the mindset
I think anybody who's past the partying lifestyle
Sure.
will enjoy Florida.
Yeah.
Everybody who's, already past that stage and they're ready to settle and they're just ready to be calm and, peaceful, they come out here.
Yeah, and the ones that
New
do want
York
to
is-
party, they can go to Miami.
Or, yeah. And, Miami still does not compare to New York though. So when I'm with my New York people and they're like, oh, I'm trying to move everybody out here. And they're just like, no, Florida's too slow for me, this and that. My cousin was just out here and she's dying to go out. And it's just like, it's not like New York. Even if I were to take her out here, she's not happy
It's
because
a culture,
not
it's a
like New York.
vibe. It's a
Yeah.
vibe.
From a
it's a
pure
vibe.
numbers, like
Yeah.
Tampa Bay area is bigger than, let's say, like, that New York spot.
Yeah.
And the New York spot has way more people in it than Tampa Bay area has,
Yeah.
in my opinion. So when you put all those people next to each other, they start mingling, things happen.
That's off track, but anyway.
Yeah.
No, I think actually you're right, and Florida is a very family friendly, state. Just in general, Tampa has done a lot of investments in downtown, Riverwalk, and so forth. There's constantly events going down in Channelside and in that area. Just like again, in our local market, we still have the beaches, we still have the national parks, we still have, you know, there's just more to do,
Oh, yeah.
more outdoor things to do. And so they really call it the salt life for a reason. Like you have to love this kind of lifestyle. And also,
You can live in Florida and vacation in Florida because there's so much of Florida you don't even know.
live where you love where you
I
live.
went on a 2-day vacation,
Where'd you go?
a week or two ago, Safety Harbor, 20 minutes away. So
Vacations. We have staycations.
I don't need to go anywhere. I'm already in Florida, so I'll go somewhere in Florida, but you know, it's not at home, so it's still a vacation in my opinion.
Yeah.
I don't need to, you know, be extravagant about it. But good. All right. So we're going to take this regional data and now we're going to make it a little bit more personal, at least to the Floridians, which are us. All right. So here's Florida. Pretty much the same data, but we're looking at the Florida version of that data. All right. And so we took the three main metros, which is the Miami, Fort Lauderdale, West Palm Beach metro, Orlando, Kissimmee, Sanford metro, which I spent a good amount of time there. In Jacksonville, Florida metro, I'm sorry, 4 different metros. And then the Tampa, St. Pete, Clearwater, that kind of metro. So as you can see, median list price, Miami's beating everybody. It's not even close in Florida by, you know, close to 200K. And all the other 3 big metros are pretty close when it comes to list price, median list price, with Orlando being slightly higher than Jacksonville to Tampa. And I think Tampa is nicer than the majority of those metros.
Yes.
In my opinion. So I think
I'm
Tampa maybe,
biased a little bit.
I think we're undervalued in my opinion, if you ask me.
We're growing. We're definitely growing. I mean, there's a lot of new spots, new little things that are happening.
Agreed. You
out
got it.
there.
You got it. And as we can see, the list price is going up, you know, year over year. They're already at the highest price point, and they're dominating the rest of the state of Florida when it comes to their price point, how much is going up year over year. So once again, those areas with those high price points, in my opinion, are the most volatile. They can go up quickly and they can come down quickly as well. But you know, it's pretty hot. It's a pretty fun time in Miami. But the crazy thing is, you look at the rest of this data, you would think that you would be showing some signs of things getting worse in Miami, and it's not really showing that right now. So we'll skip that square footage part. That's not necessary in my opinion. But active listing count, their listings have actually gone down in Miami.
Yeah, there's only so much you can do. There's only so much area there.
Yeah.
Yeah, I mean, they're building high rises. Like, man, I remember going to Miami in 2005, 2006, 2005 for sure. And I went, you know, a couple years in a row. And there was this high rise they were building over there by American Airlines, right? And I'm sitting there looking, I'm like, how are they gonna get people to live in that? And this is just how, obviously, how much I traveled. Very limited if Miami was my biggest travel trip there. And going back, you know, a few 4 years ago, it was done, and there was another one being built, like it was already almost done. So there's a lot of, they can't build out, they have to build up. And, you know, unfortunately, you know, the issue that happened with the condo has put a lot more scrutiny on condo building in general. So I'm not saying that is particularly the reason why, but you know, Miami is very congested in general. So
Yeah.
inventory, it just makes sense that there's the inventory there is.
Sure. But if you speak to most agents, you know, you would think that you would, from what you're hearing from them, oh, the market switch changing. Well, let's say in the Miami area, the data so far from what we've gone through over the first couple columns, at least for Miami, is not showing that. Now, the listing count in Orlando, Jacksonville, and Tampa, those have increased, with Tampa being the highest at 55%. And by the way, that's not astronomically high. Like if you look at the numbers that I showed earlier, the West has even higher numbers of listing count going higher. I've heard of some places, maybe Arizona, et cetera, where it's at 100%. Like their listing count has doubled year over year. So listings are going up, but once again, and we'll get to that part. This column shows the days on the market. It's the days on the market are still not increasing, which means that it's extremely high seller's market. Anything less than 6 months is considered a seller's market, which means that the homes flying off within 30 days means that as a buyer, yeah, there may be more listings, but even if the listing double, triple, quadruple, if it's still only 30 days that homes are being on the market, that means it's a high seller's market. You're competing with a lot of buyers to get those same homes. Price reductions in all different counties.
Yeah.
We are seeing some reductions, but once again, there always is reductions, and those are still lower than 2019, 2018, those sorts of years. All right, Tanya, how you feeling the data, the numbers you're seeing?
We just went through it. We covered it.
You got it. Do any of these stick out to you? Looking at Miami, Orlando, Jacksonville, Tampa, when it looks like purchase prices going up. Any feelings about any of these areas in Florida?
I just know Tampa's growing, so I know that our numbers are gonna keep going up.
27% year over year. Means if somebody owned a property that was worth 300K last year, or 327, or am I right? No, worth 370 right now.
That's
Well,
why you're the math
70K.
guy. I don't do them.
You good? You good? I'm probably missing the two. Somebody probably tell me that I got something wrong.
Please comment if you know the actual number and we'll go back and say, okay, look, somebody did the math for us. We don't bust out big calculators here for it.
Yeah,
But the main
72K higher.
Yeah.
So I mean, that's crazy. Like someone who's renting and you don't own a home, you pay somebody, that money went into their pocket, and unless you're able to save on your own, like that's it. Is that 100% interest? You're paying 100% interest to the landlord, or you're paying whatever 6% interest or 5.5% interest, whatever it is right now. But overall, that 27% increase in price,
Yeah.
that person who owns a home last year in Tampa Bay area
Already has equity.
is increased $72,000 if the home was worth 300K
Yeah.
last year versus right now. You ask anybody, hey, if the government or anyone were to give you $72,000, what would you do with it? You can do a lot of things with $72,000, right?
Yeah.
A lot of things.
Essentially, there was a really good video that I watched, a couple months ago, maybe about 2-3 months ago, where somebody was talking about when they purchased a home and the appreciation value of their home, and that what you could do with that eventually, if you buy now, and then you use your home essentially as a way to be able to either get out of debt. Get out of debt is always a big one.
Mhm.
You can actually, if if you have children and they're going to college, you can actually help pay for their college education if you're making that decision as well. You can even set up, investments, by doing a cash out refi and whatever you decide to do with the money, whether you're going to buy another property as well. And then now you have an investment property so with the median listing price, year over year going up, there's still a projection that there is still going to be home appreciation values over the next year or two as it goes on. But the data is showing that just in general, home appreciation values are going up. So that also is a strong, I think it's a very strong argument against individuals who feel like the market is going to crash. The data still is not indicating that as of right now at all. And there are so many different factors that took place back in the last market crash of 2007, 2008, where there are safeguards in place where now you can look at the data of home appreciation values and also the inventory that's available, as well as the home already has built-in equity into it when you buy it, and look in the long term of what you can do with that equity. So if the government gives you $72,000, what would you do with it? You get to actually make that decision when you buy your home. What would you do with that actual equity that you're going to build in for yourself, for your family, or for really for just the betterment of your life in general, or will, pass that down to your children as well. And that was also good advice about not signing over property to your children, but to put it in a living trust. So I really want to look more into that. Just sidebar side, how that actually would work, so that your children don't have to inherit the property tax increase when the home was originally purchased and the valuation of it later on. It can make the difference between your children having to pay the taxes on a home that went from 300,000 to 500,000. So, this is, and we are not financial experts. I've heard this advice. I would like for people to actually get more educated about your finances and your opportunities when it comes to real estate. And the data is still showing very true that even though there may be some price reduction, that's not the long-term game. We're still looking at what, as far as the home value itself, and to buy now.
Price reductions are just getting to a normal market.
Yeah,
We've been in a different market, we're getting to a normal market.
yeah, normalizing
And,
to the
and
new market.
for buyers, I'll repeat it again, refinancing, as long as you're not refinancing to buy a new car or to buy some other thing, boat, things of that nature, that was part of what got us into the 08 situation,
Yeah.
where people refinancing more than what their home was worth. And there were guidelines where they could do that. Now they can't do that. Even if you refinance, you're going to keep 20% of your equity in the home. So if your home was worth 400K, you can't refinance and take all that money out. Let's say if you have zero, that you have left on your mortgage, home was 400K, you can't take the full 400K out. You have to leave at least 80K or 20% of equity in the actual home. So there's a lot of guidelines to keep you safe and secure. And you can be able to pull out, once again, that 72K to be to pay off debts. Who cares if your mortgage goes up 300 to 400 bucks a month if you're going to save $1,500 a month when it comes to credit cards, student loans, other auto loan payments, things of that nature. All right, a couple more slides and we're out of here. So more good news with home equity. This is what they're projecting. This is one source when it comes to home equity over the next 3 years. These are extremely conservative numbers too. This is not the 20% that we've been showing in the past couple slides. Yeah. At least 20% in Florida. So if your home, if you purchased it in January 2022 at 390K, they're saying come 2023 it's probably worth 426, 2024 441. And once again, we're not economists, and economists have no idea either. They're just throwing numbers out there. But 441, then 457, 473, 492. So over the course of 5 years, you can gain about 100K in equity based on their projections. But from the way it's been going still, you may gain that 100K in the next 6 months rather than the next 5 years. Ladies, any feelings on this? Gabriela?
Heard all my feelings. It's right there as far as based on appreciation, and that's just looking 5 years into what it's projected, and that's a lot that you can do with that extra home equity right there. So use it wisely.
Sure, you got it. Anything for this time?
Same. I feel like the word I don't know.
Good.
All right, Anita. Tanya's first next.
You got it. And I didn't mention, I apologize, I didn't mention at the beginning of the video what's been on my mind a lot lately. And the thing that I care about the most right now is actually land. Land is really something near and dear to my heart right now. And I've just continued to learn that, land value, like homes depreciate. Like your actual home is going down in value when you first put it on there. The thing that's actually going up in value is that land. And so every piece of land has a highest and best use, from an appraisal standpoint. And so you're in a residential area, if it's in the middle of Tampa, then the best use for that land could be a home. And you put that home in there and that land appreciates faster because it has a home on it. But the actual home is going down in value because, at some point in time, the roof is going to need repair. Foundations start cracking. Home is like any other, physical thing. It goes down in value for the majority of time. But when you have a piece of land with the home on top of it, that combination of things does cause the total thing to continue to increase in value throughout the years. You may have to tear down a home after 100 years and put another home on top of it. They're doing a lot in the Tampa Bay area. But overall, though, that combination is still a good combination in residential areas for building wealth and equity for your family.
Yeah.
All right. I feel like we should end on this one. I feel like that's the money one. That's the good one.
Yeah, we gotta end it on a positive note.
I don't want to end on that last slide. I apologize. The last slide may have some information that's not, fun to talk about. So I'll save that one for another video.
Why don't we
That
save
sounds
it to
good.
see what happens next month and see, what that's like. Because we didn't catch a glimpse of it, so I think it'll be a good opportunity for us to maybe discuss that on the next one. But and adding also, to like about, I like to make things like, how does this affect me personally and directly? Is that I live in what I consider to be like central Tampa, near the Raymond James Stadium, go Bucks, and it's very interesting because I've lived here for over 35 years at this point, that I could drive down Havana Avenue, and if you're from Tampa, you know what Havana Avenue is, and you're heading south, and there used to be these small little homes, and they're probably like 2-1s, maybe 2-2s and stuff. And a big builder in the local area, I won't say their name because I don't, it's promoting another builder. And it was just interesting to see one day driving down there, and these homes that I grew up driving down and seeing, these were structures in my little community, gone. And these new homes, 2 stories, because the land, you can't increase the land. They're very small plots of land, but they're building these 2-story homes. And it goes to what you're saying about the homes itself. There's a lot of older homes, and unless they're deemed historic, like in certain parts of, Tampa, you're just going to see that. I'm a little nostalgic about it, and it's not to end on a somber note, but it's also a realization that, that's what real estate really is. There were homes that were, here many, many years ago, and they're just not going to be there anymore. It's going to be a new home. And so, it's a little part of like history that's changing, but it's also accepting that change is good. Change is still good for local economies. Change is good for, just in general. And if it's going to help make people feel better about where they're living, if it's going to tear down homes that just, they need to go. They're just sad. And it's going to build this great, beautiful new home for a new family to live in there, then that's the heart of the matter of real estate. It is a transaction, but it is the home.
Mhm.
So, marry the home,
Save the rate.
You tell me, Gabriela. Tanya, anything else you would like to add for today?
Marry the home, big rate.
You got it.
All right.
I love it. We got to piggyback it. Well, overall, ladies, I appreciate an agreement. You're correct. You two are synchronized.
Yeah, we're in agreement. We see all this information on a day-to-day basis, and I add a little heart to it a little bit, but it's the reality of noticing that we're part of a team that likes to discuss these topics, and we take this opportunity now to just lay it all out there with your surprise graph.
Sure.
So, the message now is marry the home, save the rate. And then the message before was stop paying your landlord 100% of their interest. You could pay yourself 94% instead of, 6%. And 6% is the interest that you have to pay. But you're investing in yourself 94%. And it's still better than paying 100% of somebody else's interest.
One thing I'm seeing is pretty interesting. We don't got to go into this just very quickly. That's happening in other places like in the West is they're finding ways to put properties on other people's yards, and they have like boxable home, whereas like you get 50K for a home that just drives out there, they unbox their mobile home and it's ready to go with new things.
Home
of that
Depot.
nature.
Did you see
Home
the
Depot, the little
the
tiny
Home
homes.
Depot?
Home
tiny
Depot
home?
tiny home. Hey, I'm telling you, that
I want
if
a
you're
tiny
at
village.
300K, 400K, 600K, etc., it's looking too much for you. Your tiny village, that is my main game over the next 10 years. Is
We
making
have
tiny
one in
villages.
Tampa Bay, guys. This one, you didn't know
What's the
that.
name of it?
It's actually, why are you gonna call me out like that?
I apologize.
Hold on, I will find you the name of the article and I'll send it to you personally. But
Next time.
it is,
Next time. 'Cause-
yeah.
'cause I need to do some more tiny village research.
I believe in tiny villages, you know, they're tiny villages because they're designated to be like 2 individual homes, you know, for low income housing and stuff. And that's something that's just, as we're growing, we also need to look at, you know, individuals that have lived here for so long. We don't want to price them out, you know, they're
Right.
part of our community.
There you go,
Yes.
Gabriela. There you go. Well, overall, thank you all for listening in to us today. Myself, Jon Johnson, Gabriela, and friends. And you can say once again, thanks for joining us. I appreciate anyone who's able to listen to this and
Yeah.
get questions. Reach out to us. Have our information in the description. We're always happy to help. Thanks.
Thank you.
See you guys.
Recording stopped.